Joining us right now, Esther George, former Kansas City Fed president. Good morning to you. Given that Jay Powell had his meeting at the White House with the president just this week, and given the numbers that we just saw, I'm curious how you think that conversation went earlier this week and would go right now if you were in that room, what you'd be telling the president.
Well, the FOMC, it sounds like, is going to continue to do what it did even when I was there. And that is, you are going to focus on the incoming data. You're going to be listening to your business contacts, your community leaders, to give you a sense of how the economy is evolving. And so today's inflation report, for example, tells us that inflation is not accelerating. That is good news. It doesn't, however, tell us that we are making further progress toward the Fed's 2% inflation target. So I think the messages that have been coming out of the FOMC remain valid, even with today's report, and ones that I would support.
So you don't think the Fed is late? To the degree the president's out there and has stated it repeatedly, he believes the Fed is behind the eight ball here and should have been lowering rates by now.
Yeah, so I don't think you see the evidence in the economy, and it's hard to argue today that the Fed is late when you're looking at a labor market that is holding up. You're looking at personal income. You're seeing the economy's capacity to generate economic activity right now, notwithstanding all the uncertainty that I think you saw in the FOMC minutes. People are anticipating future effects. And that's why, of course, when you have elevated inflation, you're not really in a position to be thinking about how do I take a risk management move right now as it relates to changing your policy stance.
In terms of this dual mandate, what do you think? Oh, let me go backwards. What do you think inflation can actually come down to by the end of the year, given what's going on right now?
I'd be surprised if inflation is going to move down much at all, Andrew. That would be my own forecast, and I'll tell you why. We focus a lot on these tariffs, and certainly they could have the potential to be an accelerant to inflation. But I look more at our fiscal situation right now, and I do not see areas where ongoing downward pressure on inflation, other than the Fed continuing to hold its policy stance, is going to make much progress toward the Fed's 2% goal. So I think, again, when you hear policymakers focused on keeping inflation expectations well anchored, which is essential in this environment, it doesn't suggest to me that in a near term or even medium term forecast, you'd be talking about cutting rates.
Yeah, but it's been happening, Esther, whether it's oil, and oil could continue to be soft, and demand and supply could both factor into that, and that filters through on everything. For some reason, the inflation numbers have been much soft or much cooler than people think. Maybe it's deregulation. Maybe some of the stuff that we hear preached about, maybe that actually does have an effect.
Well, certainly oil prices, Joe, you know this. Oil is such an important input to how households spend. So having oil prices come down in that headline number is going to be a good thing. Remember, our housing costs are continuing to be a pressure as we go forward. And remember, there are other elements. We're looking at a workforce that is changing. So as we get more information about what does it really mean, as we've seen federal workers leave the workforce, what does it mean as immigration policy begins to shift the composition of that workforce? I think there are other elements here in these policy shifts going on around us that don't tell us yet whether we should have faith that this inflation number is going to continue in the direction that we see today, or whether there will be other impulses that could take it in another direction.
Esther, we got to run, but how surprised are you, given all the conversation we had around tariffs for months on end, and we had lots of experts come on and suggest that this was going to be demonstrably detrimental to our economy. Were you in that camp, and are you surprised now about how robust the economy has been?
Well, I think order of magnitude really took our breath away in some respects during some of those early announcements. But remember, businesses can be very resilient in the face of any number of shocks. It just takes a bit of time for them to work through it. The composition of goods versus services in our economy is another factor that I think as people hone in on how significant will this be. But I would say at the end of the day, time really tells you. These are negotiations still in flux. And so I think the story has not yet been written on how this ends up. And so I'd withhold some judgment on whether it's been an overreaction, an overcorrection here. I think we'll just have to wait and see.